In this video we are going to talk about top 10 assets that you must have. So before starting, please like this video and subscribe to this channel for our future updates. You might have a few ideas for responses, but one of the most important aspects of wealth accumulation is the acquisition of income-producing assets. These types of assets will begin to provide several sources of income for you, which will assist you in increasing the size of your nest egg over time. No one knows where the thinking originated, but it always seemed like a good method to defend yourself when money was coming in from all sources. However, while you are solely responsible for determining the optimal asset mix to reach your financial objectives, thorough research can assist you in making well-informed investing decisions. You should consider owning some of the most prevalent income-generating investments available today. Number 10. Rental properties. Many people have become billions as a result of their investments in rental properties and real estate. People also continue to accumulate wealth as a result of their ownership of real estate. It's not the most convenient alternative, and there's a significant amount of risk associated with it. Real estate, on the other hand, has the potential to be tremendously lucrative. If you own rental properties, you can receive a handsome rent check each month, which can be used to pay off your mortgage. In addition, you build up equity in your properties, which you may then sell for a profit when the time comes, pending the housing market. You can make money from your property by investing in apartments, duplexes, houses, and vacation homes, as well as renting out your property through services such as Airbnb. Number 9. Bonds. In some aspects, bond investing is similar to certificate of deposit (CD) investing. The difference is that, instead of lending money to a bank, you are lending it to governments or enterprises instead of other individuals or organizations. It is possible to achieve a better balance in your portfolio by investing in various types of bonds on the stock market, which are safer investments. The bond market, on the other hand, is frequently significantly more stable than the stock market, and it offers certain guaranteed returns. Although they generate lesser returns than traditional investments such as equities, they are nonetheless preferable. However, it is important to remember that safer investments often generate lesser returns. Number 8. Farmland. Farmland is an excellent source of revenue for a variety of reasons. Farmland, unlike many other investments, has a low level of volatility. Because it produces food, farmland is uncorrelated with the stock market. As a result, agricultural demand has remained consistent throughout time. There are two ways for investors to earn from this asset. It is possible to purchase land and lease it to a farming firm. It will take some investigation to see whether the land is in the right location and has a steady renter. Another possibility is to invest in an agricultural right or a crowdsourcing platform. Remember to do your homework on these companies before investing, as fees may be involved, lowering your earnings potential. Number 7. Building a business. Starting your own business is a fantastic way to make money. This may be something you sell on Etsy or your own real estate investment company. Making money while doing something you enjoy is doable. You can take as much time as you want with this assignment. What begins as a side project could become your primary focus. You have a number of business alternatives available to you. Create a restaurant or gym franchise in your neighborhood. These businesses require a lot of money, time, and effort to succeed. One option is to sell your skills on the internet. Graphic designers and copywriters may operate as freelancers until they acquire enough clients to start their own business. Flippa.com is another unusual concept for buying and selling websites. It is possible to make a lot of money by owning a business. It's all up to you. Number 6. Peer-to-peer lending. Peer-to-peer lending replaces banks, allowing previously denied borrowers to acquire credit at cheaper interest rates than those granted by large financial institutions. Peer-to-peer lending has evolved into a multi-billion-dollar industry and a viable revenue stream. According to famous peer-to-peer lenders, investors should expect annual returns of 5% to 7%. Because some borrowers have been known to default on their contracts, peer-to-peer lending, like any other income-generating asset, has a moderate risk. Number 5. Private equity investing. The process of investing in privately held enterprises to increase their value is known as private equity investing. This can be tempting, especially if you're in the process of forming the next big startup. While private equity investing can offer significant returns, there are a few things to keep in mind. The most evident is that you will need to conduct extensive study in order to identify the best businesses to invest in. When evaluating potential investment opportunities, keep in mind that private enterprises frequently fail in their initial few years of operation. A lockup period applies to private equity investments as well. This is the amount of time that investors are unable to access their money. A corporation's lockup period could last anything from 6 months to 10 years. When investing in private equity, be aware that a lockup period may have a detrimental influence on your financial situation. Number 4. Certificates of Deposits. Certificates of Deposit, CDs, are time deposits that pay interest similar to savings accounts. Investors make a one-time investment and earn interest over time. Contrary to savings accounts, certificates of deposit require investors to retain funds for a specified amount of time before they can be withdrawn without penalty. Certificates of deposit, CDs, offer higher interest rates than savings accounts due to the longer time period required. Investors with a 5 to 7 year time horizon can purchase CDs with interest rates as high as 2.5%. However, one of the advantages of investing in CDs is that there are no minimum income limits. As a result, CDS is considered one of the more accessible investment options. Number 3. Savings accounts. One of the simplest investments to turn into passive income is a savings account. By opening a savings account at your local bank and earning interest on your own money over time, you can make money. The amount of money that can be made depends on the type of account and the interest rate. Investors should expect to get back between 0.01 and 0.30% of their money in a savings account on average. Low interest rates may yield lower returns, as compared to other income-producing investments, but savings accounts give liquidity. Investors will have access to these funds on a regular basis. There are also high-yield savings accounts, which differ from regular savings accounts due to their higher interest rates. There are, however, typically only available through online banks, which has a number of disadvantages. Investors may be able to fund their accounts entirely through internet transfers, and any customer service issues will nearly always be handled via email or phone rather than in person. Entrepreneurs should consider the trade-off between convenience and higher interest rates while investigating savings account options. Number 2. Stocks. Stocks are equity investments that generate dividends and other forms of income. Dividends, on the other hand, are paid out over time and do not need large financial inputs. It's critical to understand the difference between stock and mutual fund investment. Individual stocks might be purchased to get a feel for the industry. Buying a variety of securities from multiple firms is essential for mutual funds. In terms of risk and return, individual stocks have the potential to beat mutual funds. If you want to invest in stocks, you must first learn about the stock market and the companies in which you might invest. Large cap dividends are one of the best income-producing assets. Because they consistently raise dividends, these S&P 500 blue-chip companies are known as dividend aristocrats. Dividend stocks are issued by mature organizations, which are more stable than smaller, growing businesses. Many technology companies, such as internet and biotech, do not pay dividends, contrary to popular opinion. Instead, they reinvest the majority of their earnings to keep their business thriving. Number 1. Real estate assets. Rental property is a frequent option for real estate investors to generate consistent income. Purchasing a house or a multi-unit complex with the intention of renting it out. Rental income over a long period of time is achievable. Without your input, your property manager can ensure that everything runs smoothly. Investing in rental property allows investors to accumulate money without having to make a huge initial investment. Real estate investing also helps you to grow your portfolio more quickly than other investment possibilities. You can buy a home and rent it out at the same time. You can then use the proceeds to expand your portfolio and revenue by purchasing another rental property. Single-family homes and apartment buildings are examples of real estate. The type of property you choose is determined by the number of units and your investment goals. The majority of first-time investors live in one apartment while renting out the others. Larger properties, with more units, may necessitate more funding and collaboration. REITs may be a fantastic alternative if you want to invest in real estate but are afraid of ownership. REITs are real estate investment trusts. Apartment complexes, offices, storage facilities, and even parking garages are all possible targets for REITs. REITs allow enterprises to enter the real estate industry without having to pay large upfront fees. More information on REITs can be found in our REITs tutorial. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.